think about it this way. So we have a range, right? We touch this level one time, all right, whatever. We touch this level a second time, all right, whatever. People short here every single time, and they short in the move, and you know, they just short. And any trader, right? Any basic trader that's shorting anywhere in this range, this is where they put their stop loss, just above this wick. And then we hit it again, and then we try to hit it again. We go lower, right? So the next time we hit it, guess how many stop losses there are in this area. Maybe I can draw this for you real quick. Guess how many stop losses there are in this area. A lot of stop losses, because that's where everyone puts it. So what do? What does a market maker do? A market maker does, if you want to short this thing and short this entire range, here's what, you know, if I had $50 million to trade this with, here's what I would do. I would put a bunch of orders, sell orders up here, right exactly where the stop losses are, because I know that there's liquidity, meaning that when the price goes here, the money, or like the crypto link in this case, gets transferred directly from the people they need to buy back. So like the money gets transferred directly from the people that have stop losses here to my orders directly, meaning that I don't move the price anymore because there's liquidity here. So I'll put those orders here, and then what I do is I'll market buy in. So I'm shorting, right? But here's what I'll do. Say I want to trade this with $50 million, right? So I layer $50 million of shorts in here. The price is here right now. And then what I'll do is I'll take $10 million and I'll just market buy. And when I market buy, the price will shoot up. It will start triggering stop losses, which will move the price further up, and I will eat up all that liquidity, and all my short orders will get filled, and then we go down. And what I'll do before I start this move here as a market maker, what I'll do is I put a couple TP levels here. So what will happen is I will market buy $10 million. I will instantly fill $50 million of shorts, and then that will move down, and I will hit my, with the large move that I created, there's a large indifference in the market, which needs to be covered out, which then hits the bottom of the range, which will fill all my orders. Done. And now I just traded successfully $50 million. How did I make that money? I literally took the position from retail traders that were putting their stop losses here for the past, I don't know how long, let's see. For the past 2 days, 3 days. So for 3 days, people are putting their stop losses here. Then I say, thank you very much. I will click market buy. I'll get all the stop losses and get a nice short in. And that's what I'll do. So, yeah. One sec. My dog's barking. All right. Right. So that's why it's very, very important that when you see a range, the chance that we will go above that range and someone will grab all this liquidity is very, very high. So what do? We do what the market makers do. What we do is we say, okay, well, we triggered an entry, say right here, right? Triggered an entry here. Fine, we can enter with a little bit. We see the top of the range, which is here. So, you know, obviously we expect the price to go here, but we also expect the price to like wake up all the way up because there's some liquidity here that people have been putting there for the past 3 days. So what do? We actually put a bunch of orders up here Same as the market makers, by the way, because we don't trade with that much, so they will notice. So as the price goes up, we'll pick up the orders here, and our average entry will be like here. And now we have a beautiful, beautiful trade with a very, very minimal risk. Instead of entering here, putting the stop loss too tight, getting stopped out, and then watch the move happen without us looking, without us, right? So that's something, and this is something that happens so often. And this is probably the most common tactic on how you can make sure that retail traders lose money. Every single time there's a big move, right? So here we moved from this pocket to this pocket. What happened before that? We took out some stop losses. Every single time this happens. We have a range here. What happened before we moved up? We went to the bottom of the range. We took out some stop losses and we have a big move up. So actually, it's in our strategy. It's part of our strategy that if we are expecting a big move to the downside, we actually are expecting a bigger wick to the upside to take out stop losses. And that's why we should anticipate the entries there. Because we're range trading anyways. Right, so that's something very important. Then that is why we don't put our stop losses that tight. Because if you do, you're the same as every other trader that does that, and all of that. Like, you think that you put your stop loss there to secure yourself. The reason you're putting the stop loss there is to provide liquidity for a market maker. What you did is you took that amount, that short amount, essentially, you took it out of the market and secured it. And when the market maker says bark, then you will hand over the liquidity to him, and he will take the move and he will make the money. And you're out there standing out of the trade with a loss in the trade where you were right in the first place. That's why we want to make sure how we look at stop losses, and this is how institutional traders look at stop losses. Is okay, that's as long as the trade is still valid, as long as the theory is still valid, and we're not overextending anyways, right? We are risk managing correctly, so nothing that can happen here actually can hurt our account. So what happens is every time the market goes against us, it's just a better entry for us. Every single time it's a better entry as long as our trade is still valid. And in this case, it is very valid because that is literally part of our strategy. To expect the fact that we will take out stop losses. And because that happens, that's why we want to enter. We can enter before that in case it doesn't happen. Me personally, honestly, the last few days, the way I've been looking at trades was by only trading the stop loss hunts. Because I just get, I by default, right away, get an amazing entry. Like I would see the signal here. I'd be like, all right, here are my orders. That's it. On those orders, you can set up your stop loss and take profits automatically. So once those trigger, the stop loss and take profit levels are set. And then what I do is, well, nothing. And then, I look back, look at the chart, a couple hours later, and I see, oh, I got an amazing entry here. And it delivered my position all the way down. And I took some profits. Obviously, I had some profits in the middle too, but, So that's the difference. I only trade this. I don't care if I miss a move. I just want the perfect entries. That's what I want because that's the highest probability. That's how I think. And it also depends on how you think and what your personality is. So that's that. And that's one part, right? However, when you trade, there's so many different aspects that you constantly need to think about, especially when you're starting out. There's like a million things that you think it seems like you need to make sure you stay on top of. And if you don't, then or you focus on one thing and you did one thing right, and there's the second, third, and fourth thing that you didn't focus on that didn't go right, and it's just can seem overwhelming. The best cure for that obviously is just staying on it and out of experience getting more of it into your muscle memory. But the best way to do that is actually to make sure you note all those experiences down into a journal. So if you do that every single day, every single trade, you note down, and then when you look back onto it, you will see patterns and similarities, and that's where the differences, or that's where the bottlenecks are for your growth. So you can literally copy that journal and throw it into ChatGPT, and it will give you an overall summary of the patterns that you need to work on. What we're actually working on right now, it should be done by tomorrow, is a journal like that on the website. It will be free for all members. Journal on the website where you can journal every single day, and then automatically an AI will come in and give you a summary of the patterns that you do. So a top list of the things that you need to focus on, you know. So that's something that should be done pretty soon. And besides that, though, noting down the things that happened, that went well or didn't go well, making sure that's noted down. First of all, you writing it down, you articulate it in your head, and then second of all, when there's a bunch of trades, you can look back and you can see, okay, these things I do over and over again, so that should be my main focus to work on. Or, you know, this I actually improved pretty well. What did I do in order to improve it? Maybe I should use that method of how I used to improve it to improve other things as well. So keeping a track record, make sure that you progress. Think about it as if you backtest, right? So if you backtest, literally what you do is you get historical data or track data that was at some point live in the market, and you track your interpretation of it, your trade of it, your entry, your exit, why you entered it, your strategy, and so on and so forth. Now imagine trading a strategy, but you never look back. You never look at one single trade that the strategy ever did in history. That's what you're doing if you're not tracking your own trades. That's literally what you're doing. It's like all the data that you already spent time, money, and energy on to create, that's valuable data, and you're just letting that go because you don't note that down. And that's something very important, because all of that data is actually what will help you growth, because really what you do as you grow in trading is you collect data, and you collect your own data, and based on the data that you collect, you see, okay, well, here are some patterns, here's what's good, here's what's not good, here's what I need to change. And without seeing that, you don't know what you should change. You could just go based on feeling, and guess what? Your feeling can mislead you many times, constantly. So that's not a viable way of how to trade, how to look at things. For example, you spot a trade, right? Okay, well you spot that trade, then you trade it, and you either got stopped out, or you hit your TP levels, or you don't hit enough TPs, or it went completely perfect, right? Whatever happened after that trade, you go into your journal and you write down, I looked at these coins, I spotted this trade because of XYZ, I went into it, the way I entered was good or bad because of XYZ, and I managed this trade this way. Now looking back, knowing the outcome, this is what I could have done better, this is what was good, this is what was not that good. And doing that multiple times a day, multiple days a week, multiple weeks in a month, that is an incredible compounding on the improvement that you do. So that's actually going to be a must in the Discord to keep track of your trades and then see the improvement overall, because us as humans, we love to lie to ourselves. And we love to, if it's not tracked, we love to, traders, same as fishermen, they like to exaggerate the results that they have. So what they love to do is like a fisherman, right? When they ask him how was it fishing today, and he was like, "Yeah, I caught a fish this big," and he just stretches his arms from left to right, right? But really, it was like a, I don't know, like a sardine or something, you know. So and that is something that many traders do, and that is something probably not as exaggerated, but that is something in a very, very minuscule sense. That's what every one of us is doing, mentally, at least for themselves. You always try to minimize your bad experiences and maximize your positive experiences. Losing in the market is a bad experience. Winning in the market is a positive experience. So that positive experience, even if the trade was mismanaged but the outcome was good, will have much more weight in your subconscious mind than a negative experience that you could have learned much more from. But as you note it down and you look at it again later on, now you don't have that bias anymore because you look at it from, as a third party essentially. And as you do that, you will find so many things in there that you can improve that you didn't even see before. Like, it's insane. Like, you were like, this is like a different world what I'm looking at, and I thought it was completely different, but clearly that was just in my head because I'm looking at it right now and it was completely different than I thought. And having this review, looking at it is a huge difference. And then also for us, like when you track this journal, it's going to be much, much easier for me to look at it and then help you exactly in what you need help in. And that will boost your performance a lot. Looking at it in the Discord and people there and people that are doing really well, and that have been growing really, really quickly. Most of those people, now that I'm saying it, most of those people had very clear, to me at least, it was very clear what they were lacking. So as it was very clear, it was then very easy to give them the antidote and see them like literally explode. Like Ritz, amazing. Like this guy is, I think, 15 or something like that. And he's killing it with the porcupine indicators, which is this and the stock strategy. Killing it. Hubert, killing it. Saifa, killing it as always, right? But those guys, Saifa had a huge risk management issue. Hubert just needed a strategy. Ritz needed to understand how the market works. All of that together, and they're doing great. So usually is the main thing, I think, the biggest improvement, the biggest instant improvement I can see in people in Discord is if there is if it becomes clear where the lack is, so I can give them the right information. Like in general, right, I have like all the information needed pretty much in order to be like a half decent trader at least, right? But that's too much information that you mostly don't need. Usually what you need is this one thing that is the biggest bottleneck, and clearing that out will just open up the flow for everything else. Because the trading is intuitive and it is simple, but it's not easy because there's so many emotional, psychological, subconscious triggers that just happen all the time. But really, when you get the hang of it, it will become very, very flowing. You'll be in a flow, and that's when it works the best. So to get into that flow, usually there's very, very specific roadblocks, different for every person, that can be unblocked, and then you start getting into that flow. So that goes without saying. Like obviously you need some underlying knowledge and some basic knowledge, but at this point I think we uploaded like close to 50 videos on YouTube, so essentially 50 hours of information and knowledge, and most of that focuses on the ground fundamentals. So there's plenty of that. But yeah, how do you stay consistent? Well, you stay accountable. How do you stay accountable? You track your actions. You make sure that your actions have consequences. You don't just brush it off. You actually sit down and analyze what went well, what didn't go well. And then as you're tracking the data, now I am able to look inside your mind and tell you, okay, well, now it's clear what needs to be changed. This is exactly what to do. Just do that and you'll be fine. And then you'll do it and then you'll be fine. So, so keeping a track of a journal is essentially keeping a track record of, and you know, it doesn't have to be good. It can be a horrible track record. It doesn't matter. Because when it's clear what pattern it is, the point is to find out the patterns. Because when you find the pattern, and you know you had an unprofitable track record and you fix that pattern, then you'll be more profitable than someone that had a good track record but didn't find a pattern. So that is the main focus there. So yes, accountability and making sure that we track what we do and that we have consequences, or we set consequences ourselves to what to the actions that we've done in the market, especially because it's so easy to do very, very dumb actions. So there's that. Also the signals that we're getting, I'm gonna check this a little bit. So for the porcupine signals, for example, we get our longs and shorts, but then also we get signals when something's topping or bottoming. What does that mean? Well, what that means is that we look at the stochastic essentially, and we look at, like in this area, right? We look at the 1 minute right here. We look at the 3 minute. We look at the 5 minute. We look at the 15 minute, the 30 minute, here, and then 1 hour. And what that does is it shows us whenever all those time frames are aligned. And when all those time frames are aligned, either topped out or bottomed out, we get a signal, topping or bottoming. So then right away by default, you can go into that trade and catch some moves, at least scalping wise, because everything's just topped out or bottomed out. But then if we get signals of for example topping here, and we get that from many other coins at the same time, including Bitcoin, including Doge, then that will tell you an overall market movement that there's probably a pretty nice short coming in the market. For example, here, the short when we had some like a pretty big dump, Porcupine, like the signals, they went crazy. They went crazy, like everything was topping, right? And that should give you a pretty good example that something might happen, because there's so many different coins saying the same thing, which is all the way back to our main core fundamentals. We're looking for confirmation, right? And this is another dimension of confirmations, because what we're looking at is we have our stochastics, right? Then we have different time frames of stochastics, which is here, and then we have our topping or bottom, but then we have different coins as well that align. So there's three things that align: our time frames themselves, well, our stochastic, then our time frames themselves, and then all the coins in the market. And as they do, then the chance that that signal is viable is much, much higher. So there is that. And then also for the dashboards, when I just take a look at them, when I look at the dashboards now, they have signals. So I'm still checking them, right? So I'm making sure that they are precise, as they should be. But now we have a Telegram group, which will probably be Discord in a while, where we have signals that that tell us whenever a strategy is entering live on the live account. meaning that what that means is that you'll get a notification every time the strategy enters, essentially. So it's going to be much easier to track, well, bundles that are, they just take much longer. There's been nice longs all across the board on the dashboards. Phantom had a good long. We can literally just see on the bundles here. But I know that Phantom had a good long. Solana had a good long. The ETH Turtle had a good long. Yeah, ETH Turtle is up 6%. Let me check bundle 4. That one has the most trades here. Yeah, Phantom, ETH, and ETH. Pretty good. Phantom's at 35% already. Yesterday, at around this time, it was like 20 something. So now we have 35, so that's pretty good. And yeah, 1 sec. All right. Yeah, when this one, for example, entered on the 12th, 2 days ago. 2 days for 35%, not bad. Oh, no, this was 4. So this was 10 days ago, actually, sorry. This one was 2 days ago. This one was 3 days ago. I was, yeah, US time and Europe time is different. But yeah, so 3 days, 6%, and then 10 days, 35%, not bad for something that just automatically runs all the time, without leverage, by the way. So I love to see the consistent line here. Really just, whatever I do with day trading, I just know that this is running, so it literally takes off the edge right away, because no matter what happens, I know that there's something that just consistently trades anyways. Okay, let me share my screen here again. So I don't know how much you guys caught Hubert and Isaac, but yeah, we talked about accountability, we talked about entries, and we talked about how a market maker would trade this. If you haven't seen this, make sure you watch this again on the replay, especially you, Hubert, that's at your level, and Isaac as well, actually. It's around your level, because this is how a market maker would trade it. If I had $50 million and I need to make a short here, that's what I would do. I would set up my orders here, right? And then I would market buy into those orders, make sure all of those fill, because our stop losses are here. So the price isn't going to go further up, because the stop losses are here, because people are putting them here for the last 3 days. And I will market buy into them. And then I will just fill all my orders that I set there, and the price will dump down to all my TPs that I set there. And I took all the liquidity from the retail traders. The retail traders are just looking at the chart like what happened, and all of them stopped out without any profit. And I just made, I made 5% on like $50 million. Like, I'm fine, So yeah, that's what happens often. And then also the confirmations on the indicator, on the topping bottoming indicator that spams all the time for Porcupine. What that means is that the 135, 1530, and 1 hour are all aligned. So when that happens, usually there's a good space of scalping movement or room there, at least. But also when this happens, and on another layer of confirmations, meaning that if all coins, including Bitcoin and ETH, are saying the same thing and everything is spamming, well, then that's a situation like this that happened. I mean, if you remember a couple of days ago, the signals were up already. So if everything's spamming, right, then that means that there's probably something bigger coming up. So that's something important as well. And then the most important thing that I said today is how to track your trades. And it's not enough to just have, trading, you track it, but really analyze a trade backwards, which means journal. And as you do, you collect data that is invaluable to you. Literally, that's the best data that you personally can collect. And as you do that, then, if I look at it, I will know exactly what the antidote is to give you the exact piece of information that will help you to go to the, to leverage out and to go to the next level. So very, very valuable information. And what we'll do will be done by tomorrow. Moonwalk is going to spend the night working on it. So thank you, Moonwalk. But what we're going to do is we're going to put it on our website, actually, a trading journal like this. And it will also, with a button click, it will summarize your history. And AI will summarize your history and give you the most important patterns that they see in that history and see what you need to fix. So that's that. It's a pretty short call right now, but that's fine because I'm still working on the scalping bot. The indicator is done already. I'm not going to show it yet. I'll make sure that the entries and exits are as they should be with the signals, and then we'll reveal it tomorrow most likely. And also what we will reveal is the journal, which will be something very, very important to use for sure. Other than that, if you guys have any setups that you see right now, I don't mind looking at them. Otherwise, if you have any questions, let me know, and I will I'll see you in the Discord, and we'll talk tomorrow again. Tomorrow will be a great call. We'll be going over the journal, the indicator, and all of that, and some live trades as well. So yes, let me know, guys. Hans, nice for you to come. I'm just about to end the call. It's a little short call today. You would love this call, by the way, though, because I'm talking about accountability and tracking performance. But just make sure to look at the replay. I want to jump back into finishing up the indicator for you guys. But really, really important, both Hans and Hubert, make sure you watch the replay. I'll make sure it's online like in an hour from now, so you guys can check it out. All right, guys, sounds great, and I'll see you guys in the Discord, and make sure to show up tomorrow because we'll go over that journal and we'll go over the scalping. So yeah, that's it, and I'll see you guys tomorrow.